Hey guys, welcome back to another episode. In this video we will share with you the most aggressive MA-RSI trend retracement trading strategy. So, this is a very simple yet profitable scalping and day trading strategy for every trader. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy and to make the most out of it. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. And don't forget to share this video across your WhatsApp, Facebook accounts, or Twitter to show your support. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. The most aggressive trend retracement trading strategy. MA-RSI trend retracement can be one of the most rewarding strategies out there. We like to make things simple. That is why we created this simple trading strategy, as it will be great for beginners and professional traders. This is a very successful approach to basically trade any type of market. It can be used on your preferred time frame, no matter your trading style. However, there are so many ways to day trade the market, so don't think this strategy is the only way. And now, before we get into the strategy, let's first get into what day trading is. What is day trading? Day trading is when you buy and sell on the same day. For example, if we were to buy Google stock this morning at 8 a.m. and then sell it at 2 p.m., that is considered a day trade. Very simple. How much do day traders make? Day traders can make anywhere from 1 to 5% of the total account each week. Sometimes more, but that requires a lot of risk. Risking too much can crush your account. So, how much do day traders risk per trade? Another aspect of risk is determined by how much trading capital you have available. Risk per trade should always be a small percentage of your total capital. A good starting percentage could be 2% of your available trading capital. So, for example, if you have $5,000 in your account, the maximum loss allowable should be no more than 2%. With these parameters, your maximum loss would be $100 per trade. A 2% loss per trade would mean you can be wrong 50 times in a row before you wipe out your account. This is an unlikely scenario if you have a proper system for stacking the odds in your favor. Risk is inherent in every trade you take, but as long as you can measure the risk, you can manage it. With a disciplined approach and good trading habits, taking on some risk is the only way to generate good rewards. MA-RSI trend retracement trading rules. Trading is risky, in general. Nothing is a guarantee. All you can do is find a system that works for you and follow it. Tweaking is always necessary, as no one has a true holy grail trading strategy. Indicators needed. 8-period exponential moving average or EMA. 20-period exponential moving average or EMA. 8-period relative strength index or RSI. Time frame recommended. 30-minute time frame chart. Remember, we like to keep it simple, so it is easy to follow. Also note that this is a very successful approach to basically trade any type of market. It can be used on your preferred time frame, no matter your trading style. Sell rules. Rule number 1. Go to M30 time frame, then add the 8-period EMA, 20-period EMA, and 8-period RSI to chart. This should be simple enough. Or, in this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. Rule number 2. Find a market that is trending down. When the 8-period EMA crosses below the 20-period EMA, we need to wait for sell signal, as it indicates that the trend is shifting down. In this example, we got the Euros United States dollar trending down. As you can see, the 8-period EMA below the 20-period EMA. The goal with this strategy now will be to find a break of the retracement trend line breakout to the downside. So we will attempt to find a place to sell, because we think this pair will go down further. Remember, trend is your friend. Rule number 3. Draw a retracement trend line. Trend lines retracement strategy are great. For a downtrend like this, you want to draw a lower retracement trend line like you see in this example. We are looking for price to come down and break it. Rule number 4. Once retracement trend line is broke, find short entry. Enter the short trade when the RSI line below 50 level or center line. What is RSI center line? The RSI measures the ratio of upward periods to downward periods and normalizes this to a range between 0 to 100. Higher values indicate more and larger up periods, while lower values indicate more and larger losses. And the 50, or the center line, is a neutral point where neither direction dominates. So, if RSI above 50, this tells you is that the average gain is larger than the average loss, you can conclude that it's in an uptrend and you want to look for buying opportunities. If RSI below 50, this tells you that the average loss is greater than the average gain and you can conclude that it's in a downtrend and you want to look for selling opportunities. Note: remember, these are 30-minute candles. We recommend you wait for the previous candle to close before you enter the market. In fact, does close below the retracement line. Rule number 5. Set the stop loss above both 20-period and 8-period EMA. We always recommend you have a stop loss with any trade you take, especially on these lower time frames as price can move rapidly. To place your stop loss, simply place it above or below both of the moving averages. This will give it a little room to move after entry. Rule number 6. Take profit target. Ideally, you always want to hit a 3-to-1 reward to risk ratio or close to it. Meaning, if your stop loss is at 20 pips, you should have a 60 pip target. Buy rules. Rule number 1. Go to M30 time frame chart, then add the 8-period EMA, 20-period EMA, and 8-period RSI to chart. This is a very successful approach to basically trade any type of market. It can be used on your preferred time frame, no matter your trading style. Rule number 2. Find a pair that is trending up. When the 8-period EMA crosses above the 20-period EMA, we need to wait for buy signal, as it indicates that the trend is shifting up. Rule number 3. Draw a retracement trend line. For an uptrend, you want to draw an upper retracement trend line like you see in this example. We are looking for price to break it. Rule number 4. Once retracement trend line is broke, find long entry. Enter the long trade when the RSI line above 50 level or center line. Rule number 5. Set the stop loss below both 20-period and 8-period EMA. Rule number 6. Take profit target. Ideally, you always want to hit a 3-to-1 reward to risk ratio or close to it. Here are other examples of the MA-RSI trend retracement trading to fully understand this wonderful strategy and to make the most out of it. When you use this strategy for scalping and intraday trading, we recommend you keep an eye on the big news for that day. If there is a news announcement, the market can get crazy. So it is important that you avoid a sudden news spike. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and share this video across your WhatsApp, Facebook accounts, or Twitter to show your support. See you next time.